Kelvin, what's up with money? How the market's responding to all the turmoil and stuff?
Turmoil. We'll get to that here in a little bit. I wanted to finish up from last segment, though, because we had a conversation. So last segment, you ended talking about kind of negotiating after the inspection. And in this particular case, a sewer line being, basically rotted out on the bottom. I talked to the clients when that came out, and they said, should we just reduce the sales price by the cost of whatever? So if it's going to cost 10 grand, knock 10 grand off. And my response was no, because if they reduce the sales price by 10 grand, it's not like they got the 10 grand because we're financing, they're putting 3% down. So I said, you have to fix this, right? It has to be fixed. So one of the, so I just want to caution people, and I know you have this conversation, but don't just reduce sales prices by that amount, because they don't pick up the 10 grand. You need 10 grand to fix this thing. And they don't have that at all. So I said, you're going to, because they're like, oh, maybe we can just reduce the price on this. Doesn't help you.
Who's going to do the fix?
Right? Because you still have a problem with your sewer line. Yep. So don't just reduce sales price. That's not how you go about doing it. If anything, I think what you say is just get it fixed right out of the gate.
And as far as the money part goes, I mean, there's lots of things you can do. I mean, we can say, okay, look, we'll be in charge of fixing it as the buyer, because then we know that it's going to get done right, not just slammed in there cheap. So, the cheapest bid kind of a deal. And although these are pretty standard, to be honest with you, it's so much a foot. If it's a good sewer company, they're going to all do it the right way. And it's got to be inspected and permitted, pulled, and all of that. But if you want to be in charge of it, we want to do it next spring. We don't want to do it this winter. It's been like this for probably 30 years. It's not like it's going to, it's got to be fixed tomorrow afternoon. So how can we recover some of that cash to allow us to do it? Well, one way is cover closing costs. So we'll say, okay, well, we're going to charge now 3% in closing costs. So that saves us 3%. Now that's
true. That's money.
That's true cash. We can reserve that now and wait. And then in the spring, we'll go ahead and make this repair. That's one way to do it. Another way to do it, because the seller is shocked at it, right? And he sold this house for this dollar amount, figuring that everything was good. His numbers worked out based on this. And all of a sudden, he's got $10,000 coming off his bottom line.
Right.
That doesn't work for him. So,
because he might be going into another property, or he need,
whatever.
There's an anticipation of
what their net is. And so they say, we'll come back and we'll make the repair, but we're going to raise the price. That allows the buyer to essentially finance the repair. And you would agree that if you had a brand new sewer line going out to the street, as opposed to a 100-year-old sewer line, that the property is worth more money. I think that's not a hard case to make. It's worth more money. We expect it to work, but if it was old and crumbly but intact, we wouldn't have a case to even be talking about it. So it's worth more, or some accommodation in between. Pay some closing costs, raise some price.
Get to the.
I've done a bunch where I've done the addendum that specifies that we would like this prepaid with a specific company that I feel comfortable with because I've worked with them in the past. And then, as you mentioned before, what's dead of winter, we can't do it now.
Right.
It's going to be done post-close, but it's going to be prepaid by the seller before closing, and then the contract is just waiting there for us to make the phone
call. Do the work in the
that.
spring.
Yeah. So anyway, I just wanted to touch on that real quick.
What about escrowing on something like that? I mean,
you can't really escrow if the work can be done now, but once we get a month in and it's frozen ground,
because we're closing, 2 months from now, so
that could be. So then you can escrow. We'll take care of it in the spring. So we have some flexibility in what we do.
1.5 times.
Yep. So, well, let's run into the money segment here real quick. Just want to touch on that. So a lot of stuff out again this past week. I'm going to just kind of read a couple of the headlines and then we'll discuss them. So it says stocks rallied on Friday amid growing hopes that the U.S. and China can negotiate a trade truce as high-level talks progress into a second day. Next headline was Treasury slip while the pound surges. That's the currency. Them and on an optimistic for optimism for a Brexit deal, equities rallied through Asia, strong Hong Kong, with shares in Hong Kong getting extra lift as protesters discuss scaling back vandalism ahead of planned protests this weekend. Crude oil rose, so a lot of stuff. And if what you notice, the theme of all this, It's all international.
Mm-hmm.
It's all international. And you're seeing some of that international market getting a little bit of a resurgence with some of these things. And there's really a lot of hope that the U.S. and China can come to some negotiation. With that being said, right, stocks are going to start to rally. What happens when stocks start to rally is that interest rates kind of go along with it. So we saw today on Friday this morning as we're recording this and on Facebook Live that actually the market opened much worse for interest rates for us, right? But good for the market.
Oh, really?
So we're going to see an increase of rates right now again. Now, what does that mean? We don't know what that means, but it moves daily, right? So, and throughout the day, like yesterday on Thursday, we had 2 price changes. That means rates intraday change. So, so sometimes people are like, hey, where's the rate? Well, we're at 3.5% or 3.625, right? Well, it could be that it moved to 3.75 or moved down literally within that day. Yeah. So you want to have somebody who has a pulse on it, right? So a lot of the files right now that are not locked that we're in the midst of, we'll probably hold off because the long term, and that's 30 days out, we anticipate that there's going to actually, if we go up, we'll have a nice correction coming with some of the things that the Fed's doing again. There's a real sense that the Fed will in October again lower the Fed funds rate. That's kind of priced in. If they don't do that, quite honestly, it's going to have a pretty dramatic effect to the markets because people price in.
How many days can you lock something without it costing money?
30 really. Days. But outside of that, it's crazy though. So we have, we're with 19 different investors, right? So we have a price engine that puts all the rates in so we can look at every rate. And what we do is this thing called a blended comparison where we're going in there and you'll see that somebody's 30-day price is worse than somebody's 45-day, 60.
Interesting.
Yeah. So you just kind of look at that.
What's the reason behind that?
I don't know, just how people own their money, like if we're selling it off to Wells or on that Wells, they're never priced well. But whomever, we're priced to, you kind of look and go, oh, wow, there's the pricing. So we can sometimes grab a 45-day price and on refis we're locked in.
So can
a
particular price. Like Chase say, I'm going to be more aggressive in the market, so they're going to price it better?
Can they see everybody else's rates too?
No, they can't. But what lenders are doing is they're pricing their short-term stuff higher because they need time because everybody's so busy.
Okay.
So they're going to there's an incentive for me to lock you on a 60-day lock.
Interesting.
Than a 30-day lock. And they're just playing.
And you can close any time within that.
Yep. Yeah.
So you don't have to close at 60 days.
You got to just close prior to the expiration of the lock. So we're locking all the refinances right now. We're locking on a 60-day lock, and our pricing isn't getting
very interesting.
Yeah. So it's really, or it might be 10 or 15 basis points difference, and it's not a big deal. So long term, we anticipate pricing to improve, which leads to lower rates. Short term, I think rates are going to go up a little bit right now. I think over this next week to 2 weeks, we'll see rates go up a little bit, and then they'll trend back down. I think. Now
you said that the Fed is going to lower rates or do some stuff in the Fed, but those rates, and we've talked about it many times, has absolutely nothing to do with the mortgage interest rates.
No, but it has a lot to do with how the stock market is
reacting,
and that's what affects us more.
Okay,
right. So
what affects you more, stock market or bond market?
Probably the bond market, but people understand the stock market better. So I think just a real easy rule of thumb: if the stock market's rallying and going up, we're yes. Rates are kind of trending behind, right? Market's correcting. Typically, we're correcting with it as well. So, and there's just so many. It says here, there's just so many unknowns in our market, right? And everything is so global.
It's so psychological too.
Yep. And there's a huge piece of that, right? So rates continue. And I mean, this past week we're the purchase market is there and it's good, but I feel like it's slowed down a little bit on new applications for us on purchase business.
It has, all across the board.
But our refinance has really filled that gap, right? So the beauty for us is we get the business from our real estate partners, but we're also getting that refinance where we're taking people. We're getting rid of this past week. It was really heavy with HELOCs and private mortgage insurance, that we're getting rid of HELOCs.
Oh, interesting. Yeah.
And getting rid of private mortgage insurance because there's been some nice equity. Even people that did something a year ago, we're finding that they've had 4 to 5 to 6% increase in value, and it's really positioning them to get lower MI or no MI.
Right.
And when you're locking in at a 3.5 or 3.625,
and your
rate,
HELOC is at 7.
Yep. Yeah. Well, 6, but yes, but still high. So we're really able to position people well. So. Give me a call. 651-231-2500 is my cell phone, actually, and love to have a conversation with